Yes, sir, family. How y'all doing today? How y'all doing this weekend? I hope everyone had a lovely weekend, some good time with their family and loved ones. Today we're going to go over a little bit of range-bound markets. Something I learned back a little while back from my mentor was when markets are range-bound, there's still a way to play them, but you have to be very precise in what you're going to do and what you're going to look for, because obviously that the range is only from a certain area of a high to a low, and then you kind of have to understand what point of what they're doing. It's been a while since I kind of done range bound markets because I really kind of stay away from them. But I had at one time traded range bound markets, and what I mean by range bound, as you can see here, as I'm marking this little box off, you see how between this area here, we just have consolidation. So the range is between the bottom of this wick here to the top of this wick here. And ultimately, we kind of just continue to range out anyways all the way this way. Okay, so we can consider this range bound also. But for right now, what we're gonna start as is just kind of over here. And then I'll kind of go into as, obviously where market comes down over here and why they decided to come over here. Okay. So right here, we'll start here. So obviously we see this bullish engulfing, which means probably the aspect might be a bullish narrative. But you also see on the bigger picture that this is a bearish narrative as it is. This immediate push up can cause the idea for the bullish market. But for me overall, the market for this area is still bearish. Now, if we go to a daily, obviously we're in a bullish market from this way, but we're just kind of going to play in the range of where, you would be interested at this point. Okay. So one thing that I was told when I started this to start to look for was, excuse me, is to look for equal highs, equal lows to be created. And they'll do this purposely because they want to get the people to obviously, decide if they're going to go bullish, they're going to go bearish. And what I mean by that is, excuse me, this initial push up here, we have a retest, and then we have these two here, which most people probably think that more or less the top of this here is going to be the breakout. So people are going to want to break through it and out of it. So think of it as this. So we're higher high, higher low, higher high, higher low. Now we're looking to go higher high up here. Now, one thing he told me was to pay attention to this. And the reason why that being is because more than likely people probably bought here thinking that this is going to, that this will be the continuation to continue higher overall. I'm not saying that that's where it's going to be, but let's just say that's where, most people probably are going to buy here and put their stop loss below previous lows being this one here. Okay. Mark that off. Change the color. We'll put it as red. So let's say this red box here is the previous low where most people have their stop loss in order to continue the bullish aspect. Same thing with this aspect over here. Since our first peak technically was the higher high, excuse me, most people are probably that might be looking for the sell. Oops, I don't know why I did that. Most people that are looking for the sell are probably going to the same way. They're going to look to sell here, possibly with this top being the actual last high. So let's say they sold off of this area right here. Let me get rid of this real quick so we can see. Let's say they sold off of this peak here, looking for this area for your stop loss. And then let's say that they wanted to take it right down here to these lows here. Either way, what they're doing is they're ranging out the market to accumulate or distribute orders in order for them to take those stop losses. Okay, so what I mean by that is higher high, higher low, higher high, lower low here. Most people probably sold this area as we spoke here, but as you see here, they come right up back to it here, and they probably take people's break evens. So what he was explaining to me is normally when you have a high here and then people break structure, they're gonna look to take the highs up this. And then also with people buying here, they're creating these equal lows within this area here with this blue line. In order for people to buy here, they're gonna buy here again. They're gonna buy here again. They're gonna buy here again. They're gonna wick them out here with the stop loss, and then they're gonna buy again here. Now, same thing can happen for this particular moment. Let's say that, okay, most people want to buy, and we'll get, I'm sorry if I'm kind of babbling on, but it all makes sense in a minute here. So let's say that people buy here, oops, at this final retest to look to swing it high. What you'll see here is that they still eventually come down lower here to take anyone's stop loss that might be here or might be down here. Either way, they're taking more people's stop losses because the market ultimately is ranging. Now, the way that I like to play this and I like to use this is I'm strictly using it for next structure points. Okay. I don't care. I'm not looking for a big move, and coming from me, typically that's pretty high because I'm more of a intraday trader where I'm looking for 60 to 100 pips in a move. I'm not really. I mean, I do take 30 pips, but for me, my main purpose is to look for 100 pips of a trade or a move. So when I come into ranging markets, I have to understand when to get out. Okay, knowing that this is the previous high and knowing that this is the previous low, I know that from here to here I'm going to sell and then I'm out. Okay. And you'll notice from the highs to the lows in the ranging markets are probably going to be 30 pips, somewhere around there. So if I'm buying here, I know I'm going to get right back out at the high of this. It's another 30 pips. Okay. Once we take the highs here, I know that there is an opportunity somewhere here, like you see here, to sell. But right back down to the lows for 30 pips. I'm not looking for the extra 60 pips. You can, like you said, if you were to take this sell here, you could try to look for this down here, but then ultimately you see here, what do? They wicked probably more or less your stop loss above the highs here. So the point of it is not to hold a trade, but ultimately learn how to use the range as an area from point to point. Also, if you want to throw fibs in this, so I do use fibs quite often with this. Okay, so let's say I took from the high to low here. Then I'm looking for this here. I'm looking for this to be the ultimate exit of my sell from here. It's a little bit more advanced, a little bit harder, but ultimately, if I'm going to sell from this peak here, I'm going to look for my take profit at the 71, which is from that last peak to here, it's probably going to be 30 pips. So yeah, it's 28, 29 pips, whatever, it's close enough. But you see how that ultimately works with this. So that's how I sell ranging markets or buy ranging markets from here to here. I know if I'm gonna look to sell here, then ultimately the 71 is gonna be another probably 30 pips from let's say we'll take from the blue line. It's only 24. If we come a little lower, it's 27. But ultimately I can use fibs to sell back into points of interest. Same thing with the sell off for that. So let's say that I was gonna sell from this peak here. Let's say from this peak here to the bottom here. I know that if I want to buy, so this is kind of backwards how I use my fibs, I guess you would say, than normally, but I understand that the point of interest still makes sense. So this is kind of, I guess you would say, counter trend trading for most people, but learning how to use this can also, benefit you in different ways. Most people, as myself too, we use fibs as continuation or re-entry points. So if this is the original buy, I'm looking for this to be the second buy, so where I can come back up to equal of this blue line right here, and then I take my profit. But also I've learned to use it as to sell into my retracement. Now the retracement is a little bit more challenging, but it's just something with ranging that I understand that works quite well, because more than likely the market is going to range between a sequence of numbers back and forth. Okay. So for example, if we take, let's see, so yeah, we have these two right here, the blue one and this one. But if I make a marking of where this is here, you'll see how where the market turns around at that same point here, here. Over here, the market makes an attempt, but it fails ultimately to continue down. But as far as the range, what I'm looking for is higher high, higher low, higher high, back into a low, back into a high, to take the previous sells that were here as a stop loss, to create a sell here, because these two right here were stop loss because they're equal bottoms, for the reason for them to come over here to take out that low, which is here, to take these lows out. And then ultimately I'm looking for, now that these were created equal highs, what are they doing now? They move up here to take those equal highs as far as liquidity. Now, being that that's not all we're looking for, so that's it. That's within this area here. But if I move this out a little bit more to this ultimate range here, you can see how these here this ultimate is a range. On the 1 hour, it doesn't look like a range, but if I go to like the 4 hour, you'll notice how much of a range it is. So you see how this market kind of just ranges in this area. Okay. So now that we're on a higher time frame, we still understand that this is somewhat of a range here. It's not really moved in a big dramatic way bullish above these highs, and it hasn't moved a big dramatic way bearish of these highs here. Now, the same thing occurs here. So I'm looking for the highs made. They take the highs here. Then I'm looking now for these equal lows to be created or taken out. So they take the equal lows here. And then what they do now, they come back this way for anyone that's looking to sell here with their stop loss above here for these equal highs here. Okay. And then ultimately what they do, they have people that bought here and people that are buying here off of this bullish move here. And ultimately what they're doing in the range is they're closing the range out from this bottom area here with this down here. And then higher high, higher low, consolidation, higher high. This is probably gonna be the higher low. But my point is learning kind of how the range works. Normally what they'll do is they create equal highs. Oops. This is what I was taught. They'll create equal highs to come down to create equal lows, to take the equal highs, to take the equal lows, to come back up, to fake this move here, to take the high again, to take the equal lows that are created here, and then they might move some type of schematic this way like that, okay? I hope that looks kind of similar to this, but the point is it's purposely made for people to get trapped up in here to figure out which way they're going, when really, if you're not patient enough or not knowledgeable enough to understand that all this is purposely created as highs, to take the highs, to take the lows, to possibly this be the low, but ultimately this is the low to take the stop loss here. You're able to read it, but you just have to be able to see it. So this is pretty advanced, but it can be pretty simple once you start to see it. So let's go to another area over here. I'm gonna do one more real quick, and then we'll see kind of the different ones. So if we want to take kind of like this area here. Okay, so we want to take this range area here, take it from this bottom here to this here. Okay, so let's say that from here, this is a little different. This one's not the same, but you'll see ultimately what they're doing, okay? So here, higher high, higher low. This creates bottom, bottom, come up to the top. This probably on the lower time frame here is somewhere where someone tried to sell, being that they took the high here, but ultimately they move up one more. Consolidation. This here doesn't show the same format, but my point is here you can see how when they range, every time they create equal lows or equal highs. So if you look at this in the 30-minute, I'll show you. It'll probably look better on the 30-minute. And ultimately too, this happens on every time frame. So if you don't see it on one time frame, just know that it might be more visible on another time frame. So this is a 30-minute of that same range. So you see how right here we have these equal highs where people probably sold. And ultimately what they do, they come take the equal highs and they sell. And then this here is probably an area where people bought thinking that it was going to continue the bullishness. Range, 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 range. Take the equal lows with this wick here, okay? And then ultimately people probably bought from here looking for it to finally take the actual range higher. But ultimately they came back down again and took these lows here. And then people that sold here, what they do, they came and took the highs here. People probably sold again right here. They came back and took the highs again. People probably sold here again, and then they came back. These all are equal lows here. So everyone that bought to go this way here, what they did was they went like this, and then they took the lows again here. Okay, so you see how in the range, it's kind of just like back and forth, back and forth, back and forth. And then ultimately, remember these two over here, if I draw a line below them, kind of this area here, look where they come out eventually anyways, over here to take this. And this is kind of like what I was just saying, like You can learn to trade these range markets. And the easiest way to do it for me personally is this. Whenever I see equal low or equal high created, I know that that's going to be my next destination. Okay. So if these are equal lows here from the next sell, once they take highs, so this right here is a high. They took the high with the wick and then they took it again right here. This is the second high. I'm going to look for this area here to come at least probably down to here. So now if I draw a fib from this bottom here to the high, you see how that comes right back into my 71.8. So I'm selling into that, which isn't always the best idea, but you can see how fibs play with ranging markets. Okay. Also, let's say I want to take the sell from here to here. I can see that this here is going to come back into the 78, but I can still understand that this here isn't actually, this is the target, but my profit. Okay, so this is the actual price of where it comes to, but between these two highs would be my target because I know that they came down and they're probably going to look to take these highs out. Let's see how many pips that is. It's probably not too much. So like I said, it's 25, maybe to 30 pips every time, depending on how good your entry is. But like I said, that's what I'm looking for. I'm looking for an arranging market. Where's the previous highs created? Where's the previous lows created? And if you guys want to think of it as support and resistance, that also works. So support, okay, resistance. Okay, I know that at these two areas that I'm looking to get out. So if I sell here, then I'm looking to get out here. If I buy here, I'm looking to get out here. If I sell here, I'm looking to get out before it even comes to the next previous here. Okay. And then if I'm buying back up, I know that I'm looking to get out before that previous shift was in this candle. Okay. And if you want to get smaller, I know that the next point of interest here is going to be at that last low of this before it creates, which comes here. And then this is just so choppy that I wouldn't recommend getting into that. But the point is you're kind of able to know that all they're doing is creating highs and lows within a range in order to take out orders, people that bought and sold. But just knowing that before you're looking for a big, 100 pip move, you're really only going to get 30 to 40. Now you could have held this like this. Let's say that you wanted to hold this sell here. Let's say you wanted to hold this sell like this. There's nothing wrong with that. You probably could have did it, but if you're in the markets every day and you're watching it do this, you're really going to get frustrated within your mind. Or if maybe you're, good enough to where you won't be frustrated. But with the majority of people, including myself, I know that I'm not really wanting to go through this. Okay. I know that this year is ultimately something that's going to cause my mind to struggle. So I'm just going to look for a small area to get into. Now, once you can get out of this, so once you see this kind of breaks there. So if you look at this, these highs here were taken out by this here. But then once we broke this range from this to this, so once we broke this range within here, you can see we sell here. And then what we do, we come back into pretty much half of this actual ranging market. And that's where this wick here ultimately continues down to this area. But even at that point, it doesn't really stay there. It goes right back up to where we were, and it's kind of just sideways until it comes back one more time down here. But that's kind of how I trade ranging markets, understanding that, within the consolidation, there's areas purposely committed to be areas of where they want to just come through and take people's stop losses. So here, higher high, higher low, consolidation, take the highs of whoever sold over here. People bought here. So whenever the price comes back down here, most people buy here to go up. But what they do, they continue bearish down this way. And then anyone that originally bought here and this area down here, this could be a rejection point where people are probably looking to buy again. So then ultimately what they do, they continue the bearish aspect. Okay. So that's kind of how I choose ranging markets to kind of trade. I used to trade them pretty consistently, but I hope it maybe this could help someone that's not too sure about like how to look at ranging markets. And even if you're not looking to change ranging markets because it's pretty difficult, it might give you a better aspect of understanding at what point in the market it might be ready for you to get in, rather than over here. Maybe wait for this over here to see what price ultimately is looking to do. Maybe be a little bit more patient, seeing that the range is um, accumulated distributing depending on which way it's going. Consolidation, it's all the same thing. It's just different names, different terms. Some of them had different meanings, but overall, it's just it's a consolidation. But that's kind of how I just think I would say to help you maybe look through it, figure out possibilities. If you're not comfortable with it, don't do it at all. But you can still watch it just to see what price does, and ultimately how price makes different moves. And then as this happens on this time frame, even if you go to a daily time frame, it occurs still. So I mean, it occurs everywhere, regardless of what time frame it is. But maybe in a daily time frame, you're able to see what it's doing in this, and then on a lower time frame, let's take this real quick. So I don't like that. Let's take another. So let's say that on a daily time frame, this is a consolidation. Okay. But if I go down to 1 hour and that same box, second, find where we were. Where was that? Sorry, guys. Lost my spot. Hmm. 1 second. Oh, okay. All right. I guess not. Not today, huh? Huh. Never had that happen before. Oh, well, let me get into that. That's weird. Maybe it just doesn't show up on this time frame. Let me see if I can find it on like a 2 hour. Oops, my computer's down. Hold on. Huh. Well, oh, there it is. Oh, it's way over here. Anyways, so my point is on a daily time frame, if this ends up loading up, so I don't. Pretty much it's going to be the same thing I was just teaching, but you can see on a daily time frame that consolidation is a much bigger move, 193 pips. So on a daily consolidation, you can play the range on a 2 hour a lot easier than if you're playing a 1 hour consolidation time frame for like a 15-minute, 30 minute pip move. So 1 hour, let's say I'm playing this range from here to here. On a 15-minute, it's going to look a lot bigger, but the higher consolidations will ultimately be easier to navigate on a lower time frame. And then as you go lower and lower and lower, you're going to have a less amount of a pip range. So when I do ranges, I like to take like a 4 hour range, because I know that within that 4 hour range, I probably have a better opportunity for more pips. This is 100 pips. So I could probably play each structure point probably 30, 40 pips. So from here to the high, that's 50. From here to this high, that's another 50. So if I'm selling here this way to this previous bottom, that's 50, almost 60. So you see, as you go through the higher time frames of consolidation, it might be a little bit easier to catch a little bit bigger of a move. But ultimately, I would just use the range bound markets to kind of understand what price is doing and where it's going. So I hope you guys kind of got it a little bit there. I hope I didn't go too much, too crazy, too fast, because it does get a little bit confusing. But yeah, man, if you guys have any questions, definitely shoot me a message. Whatever it may be, I definitely am open to having conversations. Anyone that has conversations or questions, I like to have conversations about it. Maybe one-on-ones are better than being able to do this where you can't answer questions. So much love and peace.